Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday, and we're now at the 7th of December, 2022, and the time 6:25 p.m. Central Time. So as we take a look, we see gold's pushing here under the 1800 level. The silver tried to make a run towards 22. It's back to the 2280 level. Copper seems comfortable in over a 380 number, which is strange if you think about it. A continued decline tonight in stock indices. So we're getting 4 or 5 days in a row now down in the stock indices, and one of the worst starts that we've had to a December in a very long time. It doesn't rule out the Santa Claus rally. In fact, it probably increases the odds of it to a degree. The rally doesn't mean you have to go back up and make new highs. It means you're going to come off a low from some price and get a good rally going. That's all that it means. If we take a look at energy prices, I'm enamored with the idea here. I saw January crude got to $72. So did the Biden administration pull the plug or not and say, hey, maybe we start buying this oil to replenish the strategic reserves? Don't know. Bonds and notes down a little bit, but each time they break, they come back for a new high. So let's go to the gold and get the story done. As you can see on a weekly chart, we're down midweek now. We're sitting here down about 0.5 percentage point. Okay. As we take a look at the action here, the market is still very much stuck between this spike low, that spike high, and just sort of sitting in between the two. You've got the higher low, higher high scenario. So when you have that, you sit back, you say to yourself, okay, until the market takes out this low, which is 1779.10, we have an uptrend pattern in place. If you can keep getting the pattern of higher lows, higher highs, the odds are you're going to take out that high. When we look to see where the market support is, it's very clear. It is the 18-day average of closes. Each time you're reaching down to it, you're finding the support in that general area. And the resistance, I think, will end up between the 200-day average and the upper Bollinger Band. And look at how the two are tied together here between 1816 and 1821.60. Another thing that is happening. Suddenly, these bands, instead of widening out or anything, are just going sideways. Are we entering a trading range type scenario? That wouldn't surprise me. Why? Here we are going into Thursday. We're going to have a PPI reading coming out right in front of us, I think Friday. And then we're going to get, as you know, on the 13th, the CPI number. And then we have the FOMC. The market is obviously looking at what are the strength of all these reports coming out. And then I have been telling you that I don't see why the Fed or why even the market is thinking you have to go back to a 50 basis point hike. Where's that coming from? You had 475s in a row. You still have strong economic data. If the PPI and CPI reports don't show pronounced weakness, why not just stay with the 75 basis point? And we'll see 2 months down the road, because the next meeting is February by the Fed. Hey, maybe it is time. We've got a couple of more reports under our belt and the market's looking weaker. To stay with 50, you better get these two reports down. That's why I think traders, the smart traders, are saying, we might have to go sideways a bit here. We have to see what these reports look like before any decisions are going to be made. When I look at the slow stochastic, the momentum has come down enough where you're no longer in overbought territory, barely. Any reading over 70 and you're at 69.23 gets me into the overbought territory. So my problem for me, I don't know about you, is trying to buy the market up here, thinking, well, what do I do to get it up the rest of the way? That's not an easy sell or buy, sell and mental part. In the gold-silver ratio, you're still looking at silver staying under the 18-day average. That's overall strength. And the silver market doesn't seem to want to pull back and let me in, or my clients in is the right word, back at these break lows. Now I don't want it. You're going to say, what does he mean by that? Well, with today's action, you have a higher low, higher high. If I back off from this and we take a look at what this market looks like without today, I was hoping to get the market down into the 18 and 200-day range and then tell clients, yeah, you don't want to get under that low. Now you're looking for a challenge of the Bollinger Band. Well, it didn't work out, it didn't work out the way that I wanted because the market came up today and now I don't know what I want to do. You're not overbought. You're in an uptrend, but you're not too far away from that 23.28 level, which is the upper resistance. It's still 40 cents away. But to buy it here, where do I put a stop? That becomes the issue. Got to deal with it, and I will tonight. In the copper market, overbought. No, I don't think you want to reach for this. Market's come back nicely. Now you have resistance very clearly at the 200-day moving average and the upper Bollinger Band. Not that you can't go through there, but you're too overbought. Overbought money, from my perspective, doesn't attract new buying. There are different programs out there that'll say, no, that's one of the variables we don't want to see. There are individual traders that go, no, a little too rich in the slow stochastic reading. I want to back off. That does not mean it can't go higher. That's just a variable keeping certain types of traders, I'm one of those, away from fresh purchases here. But I still think, the resistance is up there, but I'm not interested right now. You've gotten to that flat area in the slow stochastics, and I was lucky. We picked this up real early and saw it, where now the churning's just going on against the 18-day average. Wait and see attitude. What's the Fed going to do? How's the market going to look at it? If the Fed has to go higher in interest rates right away, that 75 basis point, isn't that going to be negative this temporarily? You've got to consider that. The market's hearing all this talk about recession. Deep recessions coming. First it was shallow. Now I'm starting to hear people say, no, it could be bigger than you think. I don't get it. If labor stays strong, I don't see how it can be a bigger recession than you think. In the palladium market, oversold, sort of stuck here. I don't see any play there. And in the dollar, well, I think the story that I made for you, that the first challenge of a 200-day average is often an area where the market finds some support, and that's exactly what's going on. I'm not saying it's going up yet. I'm saying the market's not going anywhere since hitting it. It got to the Bollinger Band, and it just stopped day after day. So where does this leave us for the word called opportunity? Well, it's there, and one of the opportunities you have is to put it all together. Now, as you know, we have a pretty cool trading kit, and the wording will come out here right now. There you go. It takes a moment for that video card to catch up. In the kit we created a bunch of different chapters for you newer investors, and sometimes the guys that are a little older, dusting things off and saying, I'm coming back to the market. One of them's 14 chart patterns, some of the most popular. How do they look? Which way do they come? My pivot point series, fully included in it. So's the Arun indicator series. I've included that in there as well. This is something you want to look at. I don't know how much you read, but if you're reading about M1, M2, M3, money supply moving through the economy, you got to understand it. These are just some of the courses that the CME group puts out, and they're always adding. As they add, the way that we did this, it's automatic. Your link's going to carry you right into that area and take care of the new courses as well. So how do you get this? Well, you visit our website, you go to free offers, you just move your cursor up here, give it a click, and away you go. I'm Ira Epstein. You have yourself a great day. I will see you all in my next videos, or of course, come Thursday. Take care.